here hasn't laid awake at night thinking about their money growing, like multiplying while they sleep? Everyone wants that, right? But figuring out investing can feel like trying to read a foreign language, am I right? So today, we're doing a deep dive on something that probably keeps a lot of you up at night: short-term versus long-term investing. Which one is the path to financial freedom? We're going to use an episode of the Margin World podcast as our guide. They had some really interesting points. Our mission today, and this is important, is to not just define these approaches, but to help you figure out if one of them, or even a mix of both, fits your goals best. Sound good? Let's do it. So Margin World starts off by defining short-term investing as holding an asset for a year or less. We're talking like days, weeks, maybe months. And the big draw there, obviously, is the potential for quick returns. But as they point out, I think we all know this deep down, higher potential rewards, they usually mean higher risks too, right? One thing that really stuck with me from that episode was their point about liquidity being super important in short-term investing, like how easily you can turn an asset back into cash without losing its value along the way. Selling a stock, it's way faster and easier than, say, trying to offload some property, right?
Exactly, and that's so key because it ties directly into your personal finances. Anyone thinking about short-term investing needs to ask themselves, do I have assets I can turn into cash quickly if I need to? What if the market takes a nosedive and I need to sell fast? Are those assets still going to be liquid enough?
So true. And while we're talking about things to consider before jumping in, Margin World also talked about how short-term investing tends to be attractive to folks interested in stuff like momentum trading, riding that wave of an asset on the rise. Sounds exciting.
It does, but the margin rule folks are smart. They don't sugarcoat it. They made it clear. Momentum trading is not just about being quick. It needs real expertise, deep market knowledge. And even then, sudden shifts, they happen, and they can mean big losses. What seemed like a quick win turns into a harsh lesson.
Isn't that the truth? Speaking of harsh lessons, have you ever seen momentum trading go wrong? I bet you got some stories.
Oh, definitely. One that comes to mind, this client totally got swept up in the hype around some tech startup. Everyone and their brother was talking about it. Stock was skyrocketing. He was convinced this was a sure thing.
I can already tell this doesn't end well.
Nope, not at all. See, the issue was that momentum. It was built on hype and speculation, not solid stuff, not a track record.
Yeah.
So the second the market felt a bit shaky, that stock price, down it went. My client, he held on too long, hoping for a miracle, and ended up selling at a major loss.
Ouch. Yeah, that's a brutal reminder that when it comes to investing fast and easy, those words should probably send up a red flag, right?
All right, so with that cautionary tale fresh in our minds, let's switch gears to long-term investing. Margin World was big on this. Patience is key. It's about aiming for that gradual growth over years, not getting freaked out by the daily market trauma. They spent a while on this concept of compound interest, which, let's be real, can sound kind of intimidating till you get what it's really about. Basically, it's your investment earnings, then starting to earn their own earnings, like a snowball effect.
Exactly. And that's the beauty of it. Margin World used companies like, say, Apple, Microsoft. Imagine investing in them way back when, holding on through all the ups and downs. You'd be sitting pretty right now, right? It's about trusting the long game, not panicking when things get bumpy. It's kind of like choosing the right running shoes, right? What works for a sprint is going to be a disaster for a marathon. Margin World kept coming back to that idea, finding the right fit for you.
Yeah, exactly. It all comes down to your goals as an investor. What are you hoping to achieve? What's your risk tolerance? And honestly, your personality plays a role too. Someone saving for retirement, that's way different than someone who's like trying to scrape together a down payment in the next year or two. Different goals, different game plans.
For sure. And I'd imagine how comfortable you are with risk, like how much you're willing to lose. That's got to be a huge factor here, right?
Absolutely. Margin World got into some of the, well, they call it behavioral biases that we all kind of bring to the table when we invest. One that really stuck out was loss aversion. That idea that losing money, it hurts way more than gaining the same amount feels good.
Oh, tell me about it. Makes my stomach churn just thinking about it.
Right. But see, that fear, it can mess with us. Makes people hold on to those losing investments way too long, or even sell the winners too early. So before you even think about short-term versus long-term, got to figure out your own risk tolerance and, yeah, maybe some of those biases you might have lurking in the background.
So true. This is reminding me of how much of investing is actually psychological. It's not just the numbers, it's about understanding yourself as much as the market.
You got it. And speaking of understanding yourself, another thing Margin World highlighted, it's about how much time and effort, realistically, you could put into managing your money.
Oh, for sure. Like, Those day traders, the ones glued to their screens, making a million moves a minute, I could never handle that.
It's intense, and it takes a toll. People talk about investor burnout, and they're not kidding. Long-term investing, now, it still needs careful research up front, building a solid portfolio, but after that,
Right.
way less hands-on, way less emotional roller coaster. You've done your homework, chosen investments that match your long-term goals. Now you write it out. Try not to react to every little blip.
Sounds a lot more my speed, but even then, just thinking about like a market crash, not panicking, that takes serious discipline.
Oh, totally. But that's the thing, right? Long-term investing, it's about harnessing time, that compound growth.
Mhm.
Margin World reminded us, trying to perfectly time the market. Almost impossible. Even the pros get it wrong.
So, ditch the crystal ball, focus on being a good planner instead. Have a strategy, stick to it.
Bingo. Yeah. Playing the long game. Markets go up, they go down. That's inevitable. But you ride those waves, you let that compound growth work its magic over years, even decades.
This is giving me a lot to think about for sure. One thing I really liked, Margin World didn't just present short term and long term as like two totally separate things. They talked about blending those approaches, and that really sparked my interest.
Right. It's a smart option to consider, especially if you're the kind of person who wants to try out different investing styles, see what clicks. Like Margin World said, you could have a chunk of your portfolio dedicated to shorter-term plays, maybe a bit riskier but with higher reward potential, while the rest is ticking away nicely in long-term investments.
So you get a bit of that action with a smaller chunk of money, but then let the rest grow steadily over time, like having your cake and eating it too.
It could be, but, and this is important, got to approach this blended strategy carefully. You're essentially playing two different games at once, so that's going to mean more work, more management on your end.
And that self-awareness thing, the risk tolerance, that's got to be even more important when you've got both types of investments going on.
You got it. It's easy to get caught up in those potential quick wins with the short-term stuff. But even small losses there, they can impact the bigger picture, that steady growth you're hoping for with the long-term investments. You need discipline, got to keep those overall financial goals front and center.
Sounds like it's all about balance, finding that sweet spot where you're comfy with the risk and the effort you're putting in on both the short-term and long-term side, like creating your own custom-designed investing plan, right?
Exactly. And that's what's so great about everything we've been talking about. There's no one right answer when it comes to this stuff, short-term versus long-term, or even mixing them up. What matters is gathering that knowledge, understand your options, and then making decisions that line up with your own financial dreams, whatever those might be.
It's like we're building something here, right? Like taking these pieces from Margin World, our own experiences too, and seeing how it all fits together, to make smarter money decisions.
Love that analogy. It's challenging, sure, but the payoff, figuring it out, it could be huge.
This is making me think about that Margin World quote again, the one about time in the market mattering more than time in the market. It's like with long-term investing, we're admitting we can't predict the future, which is kind of freeing.
It is. You got to accept those ups and downs. Market's going to market, right? But history shows us, long term, good investments, they tend to go up. The key is riding out the storm, not making these rash decisions based on whatever's happening today.
Tuning out the noise,
Mm,
focusing on the bigger picture, sounds great in theory, but when it's your money on the line, emotions can get in the way.
totally. And that's why having that clear strategy, it's like your anchor. What are your goals, your risk tolerance? That's what guides you, especially when things get wild out there.
So, as we wrap up this deep dive, short term versus long term, what are some big takeaways you hope people walk away with today?
Big one. Knowledge is power. Always. The more you understand about different investing styles, the more confident you'll feel making those choices that actually match your goals, not just like following the herd.
Taking control, right? Not letting fear or FOMO run the show.
Exactly. And second, I really want people to ditch that one-size-fits-all mindset.
Hmm.
Investing, it's personal. There's no magic formula, no guaranteed path. The right way is whatever works for you. It's your situation, goals, risk tolerance, even your personality plays a role.
It's about what feels right to you, not blindly following the latest trend or guru. Right?
100%. And lastly, remember, this is a journey, not a finish line. Things change constantly in investing, so stay curious, stay informed, never stop learning.
Couldn't have said it better myself. Huge thanks to Margin World for getting this conversation started, and to you for sharing your wisdom and breaking it all down so clearly. And for everyone listening, one last thing to think about. What really resonated with you today? What feels most aligned with your vision for your money, your future? Hold on to that, keep learning, and as always, happy investing, everyone.